Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just do a little disclaimer. Nothing in this video or past videos or anything I say on social media is not intended for investment advice, just my thoughts about what's going on. So, anyway, I have a disclaimer below. You can read that too. So anyway, let's get into today's market and yesterday's. I didn't do a video. I wanted to watch baseball. So it was the debut. The Nationals, my favorite team, so of a big prospect. So anyway, let's go in today's market. As I said, the theme, it's an election year. Whether it's psychologically or mechanically, they are going to do anything they can to keep these markets up. Uncle Joe does not want to make look bad during an election year, so they're going to do whatever they can. So let's go into the data, and you can see once again they're not going to let the data look horrible. And S&P Global Manufacturing, that's strong data, even though it's not at consensus, it's still expansion. ISM Manufacturing, that was poor, but I think that's offset by the S&P. Construction spending -1%, and that's below consensus. So if you look at it, that was mixed to bad. But today's data, the red book, that's year over year. That's job openings was very strong, 8.1, 7.91, and quits rate. The market views a higher quits rate, which this is 3.459. The 3.452 is good because that means people feel secure about getting a job. And even the economic optimism, even though that's negative, it was above expectation. So the data over the last 2 days is actually good. Mixed to good. I wouldn't say good, but mixed. And even if you look at this, index rose by 3.7 points, the highest level in 6 months here. Still, the index is in negative territory for 35 consecutive months since 2021. So whatever that means, but it does show there will be a really bad, I wouldn't say correction, but crash. And it's going to stay there. Corrections, even if '08, you can say it was a correction, but it's going to stay there. So a couple of articles I wanted to post out. One is Powell encouraged by cooler inflation data. We're getting back on disinflationary path. And this is good for the markets, for the equities. And this is the type of environment it ideally wants. And this is the environment when they did the SPRs, they did video. This is what it's going to be. So white gold sideways. And if you look at it, gold was down today. Just go back to, and I think it's still in correction mode or consolidation mode down today. Look at that. So that's the GLD. For some reason, Kiko and everything doesn't show. And so it says, do suggest we're getting a disinflationary path. And yeah, core PCE, that's their preferred inflation goal, rose by 2.6%, down from 2.8. So that also means rate cuts are coming, and I think there'll be a couple. I think eventually they might have to rise again, but they are coming. So, but why do I say the data is eventually going to change? And why not eventually, but it's going to change in 4 6 months is you can see that the rouge of mixed to good economic data can only, without any Fed interference. Look at this. Netflix is starting to phase out its cheapest ad-free plan. Your 11.99 Netflix subscription disappearing. This is shrinkflation. Shrinkflation has gone digital. So if you look at this, phase out the cheapest ad-free for existing subscribers, as spotted in the numerous Netflix is now asking some basic plan subscribers to choose a new plan to stay subscribed. Your last day is July 13th. Choose a new plan. And to choose either $6.99 ad supported or $15.49 ad tier or $22.99 ad. So yeah, you can see this is shrinkflation. You want less ads, you got to pay a lot more. So, and they probably are gonna have less shows for you too if you choose one of the cheaper plans. You can just get some of the shows, but not all. So look at that. And here's the other thing: Rite Aid bankruptcy bid approved by the court. And basically, this is wiping out, and this is why there'll eventually be a crash. To avoid liquidation, it's cut its debt by $2 billion in exchange for handling. And basically, what's probably going to what's happening is that the equity shareholders will be wiped out. So get rid of the debt, equity shareholders, and that's probably what's happening. But Rite Aid, that's bankrupt. It's a mainstream chain store. We had Walgreens, Rite Aid, all these stores. This is more economic data because these are just prescription drugs and stuff you need, basic stuff, beauty, cosmetics. And the other thing I wanted to get to, which shows rising drug costs force a third of Americans to leave prescriptions unfulfilled. This is report. So one third of prescriptions, which should just be 100% filled, are now just not being filled because Americans can't afford it. But the cost of prescription drugs nearly over 40% over the past decade, affordability concerns have forced about a third of Americans to leave prescriptions unfilled at the pharmacy, drug saving platform, GoodRx said in a report. So here it is, list of prices of brand name and generic drugs have surged 37%, far outpacing the rate of inflation. So, well, inflation's what, 2-3%? But yeah, but prescription drugs are 37% more. And then look at this, shrinkflation is even in healthcare. Making matter worse, insurance plans are covering fewer and fewer medications. So not only are the prices going up, but your insurance are covering less. So, there you go. And not only that, to achieve coverage, patients must jump through hoops with restrictions such as prior authorizations imposed on many drugs. Many people are experiencing financial strain of paying out of pocket for medications, especially as insurance plans cover fewer drugs and impose stricter conditions on medications they declare. Situation: rising out of pocket costs, medication not adherence, delayed care, poor health. So yeah, 32% of Americans cite affordability as prescriptions unfilled. So yeah, that's what it is. If you look at it, shrinkflation, it's gone digital, and you see more of it, and this is why consumer spending is going to decline. Look at healthcare. People can't afford prescriptions anymore. So anyway, that's all I have for today. Hit that like button, subscribe if you haven't, and I will see you next video.